Good morning. My name's David Love. I'm a PhD in geology and a consultant to mining companies in exploration for copper and gold ore deposits. We're doing the geology of copper ore deposits here. And in this pie chart down here, you can see most of the known copper resources are contained in porphyry copper ore deposits. About 10% are contained in sediment-hosted or strata-bound copper deposits, and everything else, all the other kinds of ore deposits, plus scrap and other recycling, makes up about 16%. Copper porphyry deposits and sediment-hosted deposits include supergene copper ore, which I'll explain in a few minutes. Copper ore deposits today for you are going to include four types: porphyry copper ores, stratiform copper ores, volcanogenic massive sulfides, and supergene. Most of these ore deposits occur in clusters, and the copper in these ore deposits occurs in different copper-bearing minerals. Here's a list of about 8 common copper-bearing minerals. Each one has a different actual weight percent copper. The most common one is at the top of the list, chalcopyrite, but the ones with the richest copper, like chalcocite and covellite, are partway down this list. And over here on the right-hand side, it says which kind of deposit these are most commonly found in. This is a chart of millions of tons of ore versus grade in weight percent of ore. And there's 3 types of deposits on here: porphyry coppers, outlined in this blue field, sediment-hosted or stratiform coppers in brown, and VMS, volcanogenic massive sulfide deposits, in green. What you can see right away is that porphyry copper deposits are bigger but lower grade. VMS deposits are significantly richer and significantly smaller grade, and somewhere in between, ideal perhaps, are sediment-hosted copper deposits, which can be both big and rich. Most of the copper in the world comes from porphyry copper deposits, more than 50% now, and they make up 70 to 75% of all the known resources of copper in the world. All right, what do porphyry copper deposits look like? They have accessory or minerals of molybdenite and gold also. They're large, bulk mineable, so open pits. They're generally massive, that is, they're pretty continuous, uniform things, high tonnage and low grade. Porphyry means the nature of the host rock. This is felsic igneous intrusion that hosts these things. There's some equigranular granite at the top that you could make tombstones out of. And down below here by my finger is porphyritic rock, or porphyry, bigger crystals in a very fine-grained matrix. The ore is this porphyry material with a stockwork of veins through it, which alter the host rock to the veins, and the veins introduce copper sulfide minerals like chalcopyrite and bornite and covellite. Generally with these deposits, the limits of ore are quite gradational. The copper minerals drop off gradually out from the center of ore. Bornite usually drops off first. Chalcopyrite drops off somewhere farther out. And the waste sulfide minerals like iron pyrite increase outward. So there's no exact limit to ore. It just depends on metal prices, cost of production, etc. This is a model for how we think these kind of ore deposits form. Somewhere underground, under a volcano, there is a subvolcanic intrusion which solidifies, crystallizes. It comes in the molten state, and then a whole carapace or cap of vein stockwork gets introduced full of copper-bearing veins and altering the rock that the veins cut, and perhaps introducing disseminated copper to those rocks also. Worldwide, these things are distributed in particular geographic belts, like the west coast of South America, where the Pacific plate here is subducting under the South American continent, and we have lots of volcanoes, and we have lots of porphyry copper deposits exposed, which are the eroded roots of volcanoes. Through geologic time, the distribution of these deposits favors younger rocks. This is zero age, and going left, we get older and older to 3 billion years old, and there's almost none that are more than 500 million years old. In terms of composition, there's quite a range from molybdenum bearing to copper moly gold to gold bearing, but there's no copper gold. There's no gold moly without copper. Moving on, sediment-hosted copper deposits. These are sometimes called stratiform. They're sometimes called red bed. There are two big producing camps of these today, the Central African Copper Belt and the Kupferschiefer, which is German for copper shale, in eastern Germany and Poland. Michigan over here in North America used to be a big producing camp of these. This is the world's second most important source of copper and the world's most important source of cobalt, which is a byproduct of these. These are what's called epigenetic. There was a separate episode of generation of the ore after formation of the rock. The ore minerals are disseminated throughout the porosity of the host rock, which is typically sandstone or shale. In terms of the geology of stratiform copper deposits, the ones in Europe, the Kupferschiefer, are pretty simple. They're not folded very much, they're thin, they're pretty flat, and they're undeformed. The ones in Africa, however, are quite deformed in what's called the Lafulian fold belt. And there's domes and basins and thrust faults, and what originally looked like this on the upper right when the deposits formed has been later subsequently deformed with folding and faulting into some really complicated geological shapes. The third type that we're going to talk about is volcanogenic or volcanic hosted or volcanic associated massive sulfides. Instead of disseminated, the ore material is massive sulfide like this. It's a rock that's almost 100% sulfide minerals. The orangey pink squares on this map of the world are VMS deposits all over the world. And you can see quite a few of them in Australia and Japan and Scandinavia and in the Canadian Shield in eastern Canada and in the mountains of Western Canada and some in the mountains of the southwestern US. In terms of their shape, we remember from the graph that I showed you a few slides ago that they're smaller but richer than porphyry copper or stratiform copper deposits. They're generally lens-shaped bodies of massive sulfide with some sort of root or fracture zone beneath them, or stockwork zone. Here on the right, we see a stockwork of copper sulfide-bearing veins. This is massive sulfide with yellow copper sulfide chalcopyrite and gray-brown sphalerite zinc sulfide. They very commonly contain other ore minerals, sulfides of zinc and sometimes lead, galena. Out on the fringes, they're banded rocks, sometimes with iron in them, called iron formation, and sometimes without iron. This is a black smoker. On the seafloor, we've got hot water that is convecting through a fracture system in the volcanic rocks of the seafloor and leaching, carrying in solution metal ions and precipitating them in tiny particles in this black smoke where hot water is coming out on the seafloor. We find these forming today all over the place in the ocean basins wherever there are mid-ocean ridges or volcanic arcs, wherever there's volcanic activity and heat on the seafloor. Ancient volcanic rocks are found in belts across Canada. These deposits occur in clusters, and we have a number of camps, clusters of deposits from Buckens, Newfoundland, through Bathurst, Noranda, Flin Flon, to Eskay Creek in BC, which is an especially gold-rich VMS deposit. The last category we're going to talk about here is supergene or secondary copper mineralization. Many copper deposits, especially those that formed in subtropical environments, contain an extra rich blanket or somewhat horizontal layer of what's called supergene or secondary copper ore. Here's an example from New Mexico. The rocks above the copper ore have been leached and are reddish to yellow. The supergene blanket is green and blue to black with copper. We call them oxide minerals. And down below, there's some proto ore, copper sulfides, just like coppery porphyry copper ore. Here's a block diagram of the same thing: leached cap, supergene blanket, proto ore, in this example from El Salvador in Chile. Any type of disseminated copper can form this type of supergene enrichment or secondary copper. Here's an example from the Central African Copper Belt where there was disseminated copper in a stratiform copper deposit. Leached cap, rusty looking brown, yellow, or red rock, beautiful colored minerals. We call this the oxide zone. These are different carbonates and other minerals of copper in a slightly enriched zone below the leached cap. And then there's a very enriched zone beneath that of chalcocite, copper to sulfur, which is richer than the original disseminated copper ore that got leached. That leaching process only happens in the right climate, where it was arid, but not super arid, not a desert. It happens near surface, but in the subsurface. What was originally disseminated sulfide ore, what we call hypogene, gets altered because rainwater percolates down through it and oxidizes it and dissolves the metals from it, leaving behind a leached iron oxide residue. As the groundwater leaches downwards, it reaches the water table and precipitates copper as copper sulfides and copper carbonates near the water table, and as the copper sulfide chalcocite in a concentrated zone at or below the water table. So the copper is leached from a large volume of rock, transported down in groundwater, and concentrated in a smaller, richer volume of rock, the blanket of supergene ore. There are porphyry copper deposits and sediment-hosted disseminated copper deposits all over the world at all sorts of latitudes. Those that formed in semi-arid climates, like Arizona, New Mexico, and northern Mexico, like southern Peru and northern Chile, like southern Democratic Republic of Congo and northern Zambia, existed in the geological past in just the right environment where there was a bit of rainfall, but not too much, to have supergene copper deposits form. Copper deposits that formed in very humid, rainy, tropical rainforest won't form these kind of deposits because there's too much water, and copper deposits that formed in the north under the on the Canadian Shield, for example, won't form these kind of deposits because the water in the ground is frozen half the year. They are preserved best where the climate is now more arid than it was when they formed. Semi-arid, more arid, preserves these kind of deposits. So that's it, a quick summary of the geology of copper deposits. Porphyry copper deposits, disseminated, can also contain molybdenum and or gold. Stratiform copper deposits in sedimentary rocks also contain the world's largest source of cobalt. Disseminated deposits. Volcanogenic massive sulfide deposits are massive sulfides and can contain zinc and lead also. And supergene deposits are those disseminated deposits, the porphyry and stratiform ones, where this supergene or secondary process has affected, dissolved, and concentrated a pre-existing very low-grade or proto copper ore. And that's it. Thank you for your attention.
Hi, my name is George McIsaac, and today I'll tell you about the mining of copper ore deposits. In this presentation, I'll tell you briefly about the selection of a mining method, just the general parameters that we look at in order to come up with the appropriate mining method for the type of deposit that we are mining. Then I'll get into the three main mining methods that are used to mine the deposits that you saw in the previous section by David Love. There are many more mining methods out there, but not all are appropriate for these deposits. Then for these three, we'll go through a description and general characteristics, and then we will associate each one of them to the types of ore body, again, that you saw in the previous section. We'll wrap up looking at some KPIs so that you can put some numbers on these. So how do we go about selecting a mining method? You have to understand that each mine is unique. Each mine has a different shape, a different tonnage, a different grade, and not only the average grade, but the distribution of that grade throughout the deposit. And you must understand that these shapes, resources, and grades are uncertain. There is no way for us to know these characteristics before we start mining. Don't forget that we are on surface, and then we are trying to characterize something that is in the ground underneath our feet that we cannot see. And all we have are some diamond drill holes from which we interpret all these different characteristics. We also have some methodology, some procedures, and some tools to reduce that level of uncertainty. But you can be sure that we never know for certain what we have in the ground. Now, once we have characterized our ore body, we have to match the method to these physical attributes. And of course, since we're in this for the money, we wish to apply methods with operating costs lower than the value of the ore that we are mining. So let's start with the first mining method, open pit mining. What you are seeing in this picture on the left and in the background is the final pit wall. It has a certain angle to it. That angle is a factor of the quality of the rock. You can imagine that if we have very good rock, the walls can be steeper than if we have poor rock. And that is very important because that has a direct impact on the quantity of waste we have to remove for each ton of ore, thus affecting the economics. In the foreground, you see the different types of mobile machinery that we use. We have our shovels, we have drills, we have our trucks. So basically we come in, if you take a look at the center of this picture, you see some holes that have been drilled by that drill. Those holes are filled by explosives. We blast, and then the shovels fill up the trucks, and the material is evacuated outside of the pit. Waste goes to waste dump, the ore goes to the mill. Everything must go out. Some characteristics about open pit, we're looking for massive ore bodies that have hundreds of meters laterally and again also vertically. They need to be at or close to surface. So basically we wish to limit the amount of material that we take off the top before we actually reach the ore. Again, for economic purposes. If it's too deep, there are other mining methods we can use. In general, open pit mining has a low operating cost. This method can be very productive and it's very appropriate for low-grade ore. And one thing that is important, again, referring to waste, as we are going deeper, the amount of waste we must remove increases. And there comes a point in the life of any deposit where the quantity of waste to remove, the cost of removing that, becomes prohibitive. And therefore, we have to limit the depth of the ore body. The second method I wish to show you is called block caving. You'll hear sometimes the word panel caving, which is just an adaptation on the technique. What you're seeing here is an underground method. We have a deposit that measures hundreds of meters laterally and vertically. And we come in underground and we set up this infrastructure level at some point below. From this infrastructure, we're going to expose the rock until eventually it starts to cave under its own weight. Through other development headings, we come in, we pick up this broken rock, and we send it to surface through our transport system all the way to the process plant. The beauty about this is that once it starts caving, we let nature carry on with its work. The caving comes naturally, we pick up the broken rock underneath, and we send it to surface. So, some characteristics about this. We need a massive ore body, hundreds of meters in all directions. There's some drilling and blasting only during the preparation, the development of this ore body, because once it has been properly developed and the rock starts caving, there's no more drilling and blasting to be done. We let gravity do the work. It does require a long time to develop these deposits. And also the time to ramp up to full production may take years. So there's a lot of capital involved up front, and the revenues come in only later. By far, it is the cheapest underground mining method. It has low operating costs, and you can understand, we let nature do the breaking for us. It can be very productive, hundreds of thousands of tons per day, and it's quite amenable to low-grade ore. The last mining method I wish to show you is sublevel stoping. Now in this picture, we have this vein in blue. There's some development at the bottom and some distance upwards, probably 30 meters in this drawing. There's another level. That's why we call those sub-levels. From these sub-levels, we take drills and we drill long holes that we will fill with explosives, and we will blast these rings sideways into the void in the area that's called stope, and the blasted ore falls by gravity to the bottom of the stope where our shovels and our trucks, we pick up the ore with our shovels and our truck, and we ship it over to the mill, to surface to the mill. The beauty of this method is when a stope is finished, we can backfill it either with cemented rock fill or with the tails from the process plant to which we add cement. We backfill that void, we wait 30 days, and we can go and extract the ore that is located adjacent to this area that we just mined. So that way we can recover the ore, all the ore in the deposit, slowly but surely. For this method to work, we need vertical veins. Let's say down to around 50 degrees, sometimes maybe less, but in general, they have to be vertical. There's a lower capital cost because these mines in general are smaller and they require less development. They also are faster to ramp up. We can achieve full production in less time than the other mining methods. However, because of all these development in the ore, plus the drilling and blasting, it has a higher operating cost. In general, you see that the areas are quite limited, so these mining methods are less productive, and they are amenable to high-grade ores. So let's put some numbers on this. For both open pit and block caving, in general, when I talk about low-grade ore, we can mine material that has a grade of approximately 0.4% copper as a lower limit. They can be very productive. Many of these mines produce more than 100,000 tons per day, which is significant for mining. They have low operating costs. In general, they operate for less than $10 per ton. Of course, none of these numbers I'm showing you are absolutes, but that's a general tendency. And this mining method, these two mining methods, are applicable for porphyry deposits stratiform deposits, and supergene. Sublevel stoping. In this case, because the operating cost is much higher, greater than $40 per ton just for the mining, we need a higher grade, probably greater than 1.5% copper. They are definitely not as productive as the previous two mining methods. It is very rare to see a sublevel stoping mine produce more than 4,000 tons per day. And this method is quite amenable for the massive sulfide deposits. So if we match the mining methods with the deposits, porphyry copper, most likely open pit if we're close to surface, and as we're going to depth, block caving. And around the world, that is the natural evolution. The mine starts as an open pit, and with time, as it gets deeper, when it gets uneconomical to carry on with the open pit, we go underground and we start block caving. The supergene deposits are usually very close to surface, and these are always by open pit. Stratiform copper deposits, again, long, flat deposits close to surface that we mine by open pit. And the massive sulfide deposits are mined by sublevel stoping. And to wrap it all up, most copper is mined from the porphyry deposits, supergene deposits, and stratiform. That's where most of the copper comes from, because they have large resources, they have low grade, they're close to surface or at depth, but they are amenable to those low-cost mining methods. I thank you for your attention, and I'll take your questions later. Thank you.
Good morning, everyone, and welcome to the last talk of this session, following on from the more technical talks, I guess. In the first two speakers, we're going to look now more at a value measure in terms of this overall value chain. So I've been asked to talk about what is good from the perspective of a copper investment, copper project, copper mine. When we're measuring quality in any aspect of the mineral business, we can think about a value chain as going through various stages from the very technical right through to the final economic stages. So we can think about the value chain as a multi-stage process of convertibility. So initially we're converting ideas and geological concepts into targets, but then we go through the process of systematically converting targets to discoveries, discoveries to resources, resources to reserves, and finally converting reserves to production. But this is really an all or nothing sort of process. You either make it through the chain or you don't. So if you miss any step in the conversion process, it's basically a fatal flaw, and you end up with a break in your value chain. So ultimately, like any chain, when you go through these steps, really it's the weakest link, which defines the chances that you're going to get from one end to the other of the chain. At the front end of this value chain, we're mostly concerned with the geological quality measures such as grade and tonnage, contained metals, mineralogy, etc. And as we move through the process and get to the final stages, we're looking at the back end of the chain as being primarily concerned with economic quality measures, measures of both size and return, typical measures of net present value, internal rate of return, etc. But while investors can generate good returns on any type of copper project, they certainly can't generate good returns on all projects, which is why we're talking about quality measures. But the real winners in the copper space, and probably true in almost any sector of the mineral space, are the big ones, the big projects, the big mines. Those are the ones where you really can capture value. So in the copper space particularly, size really does matter. The key size metrics or characteristics that really define the business are, first of all, just the amount of metal you have. So it's contained metal. But then when we start looking at the economics of projects, you need to consider throughput, terms of capacity, the annual capacity that you put ore through your plant, output in terms of the amount of metal, in this case copper, that is produced over the life, or more importantly on an annual basis. And then longevity. Longevity is a really key aspect of understanding the value chain in the mineral industry generally, but specifically for copper. If you think about the process of going through these steps of convertibility, then the timelines associated with discovery, delineation, permitting, financing, developing. Typically for big copper mines, it's somewhere between 20 and 25 years on average to get through all of those steps. So if you don't have longevity in your projects, if your project doesn't have a long life, then the business doesn't really make much sense. If it takes you 25 years to find and advance a project to the point of getting into production, and it only has an 8-year life, then that's a pretty dismal sort of business model. So we want to have longevity. We want to have, as a quality and as a size measure, we want to see decades worth of life or potential mine life in our projects. The last point related to size is the concept of scalability. And when you think about big copper projects, many of these projects are highly disseminated mineral systems, which may have various levels of mineral halos and grade profiles. And as a result, you'll see often when you look at the history of big mines that they're able to increase both their throughput and their output over time as the project is understood, as some of the initial capital is paid back. So scalability becomes a very key factor in capturing and recognizing value in the copper mineral chain. Like all quality measures, size needs to be considered in the context of changing industry practice. You can't just talk about any of these quality measures as a static measure. You need to think of them as more dynamic in nature, especially in a business like ours where you have constant changes to technology and even more frequent changes in mineral markets. So I'm going to look at the size and importance of large copper mines historically over the past 43 years. Just picked 43 because I happen to have some data from 1978. So let's look at these the importance of the big mines over time. So if we go back to 1978, you'll see on the left-hand side of the slide, you'll see the 10 largest copper mines by annual capacity that were producing copper in 1978, starting with Chuquicamata at 475,000 tons, El Teniente at 375,000 tons, and then all the other mines below 300,000 tons of copper, all the way down to the 10th largest mine, Palabora, at 125,000 tons. Collectively, those 10 deposits or mines produced a little more than 2 million tons of copper. And in 1978, that represented just a little bit below a third, or about 30% of the total copper output for that year. If we move now to 2008, so a 30-year jump, you'll see that you'll see a few things. First, the largest mines in 2008 are much larger. Escondida is almost 3 times as large as Chuquicamata was in 1978. And you see collectively that the 10 largest mines in 2008 produced 5.5 million tons of copper. Again, about a third of the copper industry. But you see that in 1978, there were only 2 mines that had more than 300,000 tons of copper output. And in 2008, all 10 of the largest mines had that minimum amount of copper value. You'll also start to see some indication of longevity here. That's a 30-year window. You see Chuquicamata and El Teniente, for instance, which are the top 2 mines in 1978. They're still in the top 5 mines in 2008, 30 years later. And when you think about scalability, you'll also see that those two mines, which have been in production for 30 years, Chuquicamata has increased its output over that time from 475,000 tons all the way up to 680. El Teniente went from 375 to 430. So not only are you seeing the size, the average size, and the biggest mines increasing, but you're also seeing that some of the older mines are also scaling up in terms of the amount of copper that they're able to produce. In the last year, in 2021, again, you'll see the top 10 mines here. The biggest mines, again, you can see that they've grown. Escondida has gone from 1.3 to 1.5. Grasberg's increased. And overall, the amount of copper produced by those 10 mines has increased again to 6 million tons. And again, that represents about 30% of the overall copper market. So what do these values tell us? Well, over a 40-year period, capacity at the largest 10 mines represents about a third of annual copper mine production. And I'm not sure exactly what percentage of the number of mines those 10 mines represent, but certainly less than 5% of total copper mines. And if you added, say, in 2021, if you included the next 10 largest mines, the top 20 mines, for instance, the percentage of total mine production in that year would increase to about 46%. So you can see that the distribution is highly skewed towards these very large operations. And the increase in scale, you can see the largest two mines in 2021 have aggregate capacity greater than the whole top 10 mines in 1978. So size is driving and scale is driving the copper business, or at least it has been over the past 40 years or so. Longevity is also a key quality metric. 8 of the 10 largest mines in 1978 are still in production, and one more of them might come back into production. So longevity is definitely a key factor in these very large, important mines. But as I mentioned earlier, scalability is also a key quality. Almost all of the mines on that list have gone through 1, 2, 3, 4 different increases in terms of both throughput and output. And you have to recognize that the relationship between throughput and output for many of these disseminated systems, it means that if you're increasing your copper output, that you usually will have to increase your throughput at a higher proportion. That's because typically when you scale these operations, you're decreasing your unit costs, and that means you're typically lowering your cutoff grade and your average grade a little bit, which means that any increase in output has to take into account the lower grade of the throughput going into the plant. So that's the historical picture. We can see the importance of size and the various size measures. But what about the next deposits? Obviously, if this is a session looking at investor benefits and trying to measure quality of deposits and investments, we really can use the historical situation and data to see where things have been and to give us some indication of where they're going. But really, we're looking at the next set of deposits and the next mine. So what can they tell us about quality measures in the value chain of copper? This chart shows 10, I'm not sure if it's the 10, but 10 of the largest known deposits based on the amount of contained copper that have not been developed. And so what I've shown is just the name of the deposit, the jurisdiction, the study stage, either preliminary economic assessment, feasibility, or pre-feasibility, or advanced exploration for some of them, the contained metal, and then the average grade of copper. And the first thing you should notice is that these projects, some of them are very big, 26 million tons of contained copper at the top, down to 8.7 million tons of contained copper at the bottom. Collectively, they represent 135 million tons of contained copper. Two things about that. One is that in today's world, that represents probably only about 6 years or so, maybe 7 years of actual copper supply, mine supply. And it also suggests that these deposits probably will be bigger than the numbers we see here. If you look at the historical set of data, we saw that the big deposits in 1978, Chucky and Bingham and many others, that they actually were able to scale up, which means that the contained copper measure that we see here may indeed be 1 or 2 or 3 times as a factor in the overall amount of contained copper. But we don't know that yet, but again, we can assume that's the case. The other quality measure clearly for copper deposits and any mineral deposit is going to be the grade. And outside of Resolution, which is a very deep underground mine, which has an outlier grade here of 1.92%. The other grades of copper all fall within a range of just below 0.4 to just below 0.6. And that's interesting in the sense that if you look at many of the recent large-scale copper developments, they're pretty much in that same range of between 0.4 and 0.6. So has the definition of good changed with respect to deposits and our copper value chain? Well, the one thing you know for sure is that the message that never changes is that you can't make a silk purse from a sow's ear. In other words, you have to have good geology. If you don't start with good geology, you're never going to end up with a good mine. So the most obvious break in the value chain, or the fatal flaw in almost all commodities, is insufficient geological quality. If you don't have enough grade or tonnage, you don't have rock characteristics that will support your mining, or you don't have mineralogy conducive to good metallurgical recoveries, your project, it might be interesting to geologists as a sort of scientific anomaly, but as an investment opportunity, it doesn't have any value. So what I was trying to get at here by showing the historical numbers and the set of existing development stage projects is to show that the geological quality measure, even though we're talking about changing technology and very volatile commodity markets, there doesn't seem to be a whole lot of change with respect to what you really have to start with in order to end up with a high value or a good project once it reaches the end of the value chain, which is the last step of conversion into production. In terms of the dynamic aspect of good, or quality, if you will, as we move from the beginning of the copper value chain to the end, we here now see that the definition of good has really changed, or the definition of quality. The last step in our conversion process, which was the reserves to production, has become significantly more challenging. Over that period of time, we were looking at over 40 years, there have been some major changes in terms of what actually constitutes a good discovery or a good project. And the challenges associated with that last step in the conversion process are more often than not related to ESG issues, to community issues and water issues. And having good geology and good economics is no longer sufficient to get through the value chain. And once again, the value chain is only as strong as its weakest link. And if you can't get through that final step, then you can have all the geological and economic quality in the world, but if you can't get the project into production, then really, what's the value? How good is your project? Let's go back quickly and look at those 10 projects in the copper development pipeline and look at them again, but not from the perspective of the geological quality, but the perspective of how we would assign a quality measure with respect to the ESG sort of component or the community component of these deposits. Now, you may or may not be familiar with some of these deposits or all of them, but if you are familiar with any of them, you'll know that almost all the deposits in this list have some sort of challenge associated with acquiring a social license to operate. And it doesn't seem to really matter where the deposits are. You've got Pebble in the US, and if you're familiar with its history, it's had a long history of disputes and lawsuits and setbacks, and has never been able to rise over the permitting challenges. La Granja in Peru, second largest deposit, again, only at an advanced exploration stage, but it's been that way for a long time. Certainly publicly known that there are some community issues there. Rikodik in Pakistan, Antofagasta and Barrick basically got kicked off that project a decade or so ago. Barrick is back in there now. We'll see if they're able to overcome the jurisdictional risk there. Then of the remaining projects, you've got Azules, Tacataca, and El Pechon are all in Argentina. Argentina is a tough place to build mines if you have tried to do so. I'm not sure when the last large-scale copper project was built in Argentina, but it's certainly challenging. Tampakan in the Philippines. I remember looking at a feasibility study for Tampakan in the late 1980s, and the same issues that were at play then are still at play in terms of challenging it. Then you've got Cascabel in Ecuador, one of the more recent discoveries and studies in the copper pipeline. Again, Ecuador certainly in the bigger picture has some reasonably high degree of political risk getting through the last stages of the copper value chain. And then finally, Frida River in PNG, again, has been around for a long time, several owners, several feasibility studies, and still has not got over that hurdle of getting a social license and getting built. So to wrap up, we've seen that improved technology and metal prices do not really seem to have changed much in terms of our definition of what is good. So we've seen improvements in all sorts of technological aspects. The metal prices are way higher now than they have been in a long time. But what is good still seems to be what is good. You know, a marginal project seems to be a marginal project. And partly that's because potentially lower cutoff grades are typically being offset by higher costs, so that the average grades of advanced projects aren't really showing any sign of significant decrease, at least not yet. It could be that if we stay at $4 plus copper for 15 years, that we'll ultimately start seeing a drop in cutoff grades and a drop in average grades over that period of time. But we're certainly not seeing it yet. And it's still true that you cannot make a silk purse from a sow's ear. If the geology is not good, the economics are not going to just appear out of the blue and magically be fantastic. So you can't have a fantastically economic mine if you don't have good geology to start with. So you can't make a silk purse from a sow's ear. On the other hand, though, it is entirely possible to make a sow's ear from a silk purse. And here I'm talking about the fact that you can have a good-looking deposit geologically, you can have a great-looking deposit economically, but it may still have no value because it can't get through that last step in the conversion process leading from basic geology into profit in this value chain. So without the final conversion process and a social license to operate, the fatal flaw and the break in the value chain is this last link. And if that's the weakest link, then that is ultimately going to determine the final quality measure of our copper projects. Thank you very much.
Hey guys, look, thanks very much for your presentations. Hopefully some learnings there for everyone listening into this. We're just going to run a little M&A session, sorry, Q&A session now. And so people do send your questions. Type your questions in on the panel on the right-hand side. Anything you want to know, these guys can hopefully help you with. I'm going to start with an obvious one, with my investor hat on. Is like, are we going to run out of copper anytime soon? What do you think, George?
Well, are we going to run out of copper anytime soon? I would say no. I think Mike has a different opinion, but basically over time, we'll see metal prices change. We'll see new techniques for processing the ore. We'll find ways to find copper in places where we can't find it today, either at depth or in places that are very hard to explore. Who knows, maybe we'll go into mine asteroids eventually. But as
seabed
or seabeds, well, that one I'm not too crazy about. But yeah, that is another area that is hard to explore today. But there is a Professor Tilton talks about the mineralogical limit. There's a point where you just can't get more copper out of the rock, and when the grade gets too low, eventually you just can't get it out. So metal prices will increase with time. We'll be able to mine lower grade deposits, but eventually we'll reach that limit. But I'll be long gone by then.
Right. And David, what do you make of it? Your talk was on existing copper supply and resources, and you outlined some where it's coming from today. But what's your take on existing resources? Where are we going to have to go next? What's the contribution of innovation and all of this?
Oh boy, that's a big question. It's hard to predict innovation. We have in the past seen some extraordinary innovations that have really changed the mining world. And just to pick an example was the invention of flotation, which allowed production from much lower grade deposits, or the invention of dynamite. And that allowed production from, instead of burning wood and cracking rock with pails of water. So it's really hard to predict how innovation is going to, when it's going to arrive, or how it's going to affect us in the future. It could be a game changer for a number of really low grade, uneconomic deposits at present. I saw in the backstage chat that there was a question about whether old deposits that were thought to be uneconomic were revisited, and that kind of bears on this, that yes, they're always revisited. And a good example of that would be right now, Murdochville, Gaspé Copper is being revisited by Osisko years and years after Noranda closed it, and they look like, if you believe what they say, they are going to reopen it and be able to process the super G ore that has sat there in stockpiles. It was mined and stockpiled with the vision that it would be revisited, but it was never processed until maybe next year.
Right. And David, I'm going to let you come in first before we kind of mix it up a bit, making sort of riff off of each other. So, Mike, George says you're probably going to disagree with him. Do you?
Always.
Always.
No, Mike's muted.
No,
Go for it, Mike.
I'm good. Yeah, no, so no, I would never disagree with George, but I actually concur 100%. I very much feel that depletion is an economic concept, not a physical concept. And so when you get back to the idea of scalability and the biggest copper projects that I was talking about are really almost all related to mineral systems where you have halos of mineralization. I think the reason that they've been able to scale up in both throughput and output is a function of that underpinning geology. But again, going back to my discussion, I think that the only risk to future supply is ESG things. If you look at all of the demonstrations right now, say in Peru, around a lot of the really large copper projects there, that is really a factor that will impact supply much more than the underlying geology or running out of deposits. I have no time for physical depletion. I think it's just a scarcity construct that people keep coming back to that should have gone away long ago. But I do think that the ESG issue is serious. But I also believe that it's an economic construct as well. That I'm not saying that you can just buy people off, but I do believe that a new model for sharing of benefits is the only way through the ESG quandary, and I think that has to happen by hook or by crook. I don't mean to disrespect anyone, but I would say in my 30 years working in the industry, I would never accuse the mining industry of being particularly proactive, and I think we're going to have to react and find a way through our ESG issues by adding on to our production costs or whatever it takes to actually get longer term, more stable social license.
So, Mike, as far as you're concerned, ESG is a real thing. Funds, banks, investors should pay attention to that. It's real. It's not a case of people, you go woke, you go broke.
No, it's absolutely real. And I think living in Vancouver, you judge how real something is by how thoroughly it filters down to the junior sector. And I'm on the board of a few junior companies and actually chair of the ESG committee on one of them. And it's real. Even junior investors now want to see that that's a consideration in your board and in your management and on your projects. So yeah, I mean, that's the litmus test for me. If it's filtered down so it's mainstream in the junior space, then it's real.
Okay, George, you just heard Mike talk about where problems may lie, the red flags. What do you consider some of the red flags for the copper industry more broadly?
Wow. Yeah, I have to agree with Mike that the ESG is the big thing. I live in Chile, and we're starting more and more that issue to see more and more of that issue. The other big issue we see in Chile is the water. Mining takes water. Mineral processing takes water. There's no water in Chile. So that's a big issue. What else are we seeing? Well, we're specialized labor. It's getting harder and harder and harder. So we will need to see a development of robotics, automation. We will need that, or else the costs of labor are going to shoot through the roof. And I mean, right now we're seeing just a lack of labor for just about every industry. These are the big issues in the short term. Yeah.
Okay, so David, if I'm an OEM or if I need copper supply for part of my infrastructure rebuild, should I be nervous? I know as an investor I'm not, because I think scarcity will drive the price up. It's all good for me, but I need to think a little bit more holistically than that. So what's the reality out there? David, that's for you.
Oh boy, yeah, I know. I don't even I don't know how to approach that question. I think there's always going to be more deposits out there. It's just a matter of, sorry, my phone's ringing here. I just got that.
Right, okay.
It's just a matter of finding them and their economics being viable. And I think we'll always see more copper development, more mines developed, and we're just going to see a continuation of the decrease of the average grade of production over time. And somehow the mining world is going to keep up with that in terms of profitability, and it's not the bad thing that the doomsayers are predicting it will be. We have technological advances and economies of scale that will accommodate that. And you saw in the chart that Mike put up that the average grade of all the upcoming 10 projects, except Resolution, so 9 out of 10 of them have an average grade around 0.5 or 0.6. That has decreased over time since 50 years ago. The average grade was probably over 2% for copper production, and we're going to see that continue on downwards, and we're going to accommodate that somehow in the mining technology space.
Okay, so if that's the case, Mike, we saw your list of copper developers, not the producers, right? The top 10 largest mines, they're obviously, scale's really important, as you say. Maybe we'll talk about that in a second. But the developers, a lot of them being held up. You said it takes 25, 30 years to get into production, if you can get into production. It's not a very encouraging environment in which to invest a ton of capex or opex. So again, should industry make of this? Should we be designing copper out of cars? Should we be less dependent on copper going forward? I mean, how do I play it if I'm copper dependent?
Well, I guess it really depends on your time frame. And if we go back to your Freudian M&A, the investor is looking for a return, and you can generate returns without actually having a copper project go into production. And certainly, again, going back to the junior space here in Vancouver, it's quite possible to make good returns on the discoveries. And if you look at the so-called Lassonde curve, where you get different returns at different phases of this supply chain, you don't necessarily have requirement to have a mine go through this path at sort of supersonic speed and move through from discovery to production. The reality is that regardless of any issues of grade changes or technology changes, the timelines, I don't believe, are going to get better. If it takes 20 years to go from discovery to production now, it most likely is going to take more years in the future, and that's the reality. So as an investor, you have to be aware of that, and you have to think about when you get in, when you get out, in terms of these various projects. And the reality again is that not all projects, regardless of how good they look on paper, are going to get built. And so you look at that list, and some of those projects, going back to George's comment, not in his lifetime. Well, I sort of feel the same way about some of those projects, and I think that's the real challenge is getting through that. But I don't think you need to worry about taking copper out. Certainly, from a mineral economics perspective, substitution is a real thing. Copper's good at what it does in terms of conductivity, basically, and as its main use. But there are other metals that can be substituted if we absolutely have to. And finally, just one last comment on that. It's interesting to look at the growth trends in copper, and if you take a sort of 2.5 to 3% compound average annual rate of growth, then you basically double your copper output in about 25 to 30 years. And that means we'd be producing 40 million tons of copper a year in 25 years from now. And then that starts to create a challenge if you take the really long-term view of things. But some other stuff I was looking at for a different session, if you look at the relationship between population and copper growth, it's interesting to look at the long-term projections over the next, say, century, if you want to go really long-term, where population will start to reach basically a flat level in terms of zero growth. Then I think you're going to see the same thing happen with most metal consumption, and copper may be the growth trends may actually level off over the next 30 to 40 years.
Right. I think if you're in copper, we will deal in very long timelines here. But in the short term, do you think that we need to readjust or reset, recalibrate our expectations of this new green economy that we want to build for ourselves? What do you reckon, David? David, that's for you.
Yeah.
I'm giving you the tough ones.
Yeah, you are. Yeah, you stumped me there.
It's tough love.
Yeah, I don't know where to go on that one. Anybody else have any thoughts?
George?
Matthew, I'll ask you to repeat your questions, please.
Yeah, I'm saying, we're dealing in these very long timelines in copper. We talked about how long it takes to actually get into production. We're talking about, well, Mike said, perhaps we may start flatlining in the next 20, 30 years, but should we change our expectations of this new green economy we seem desperate to build very quickly and phasing out of fossil fuels now? Or, can the industry keep up? Can the miners that you've talked about, deliver to that demand that's in the near term?
I think in the near term, we're going to see areas of growth in certain industrial areas of growth. We see right now a whole lot less investment in fuels, in hydrocarbon generation of electricity. The money right now is going toward more green. Many mining companies right now are selling themselves as green for mining copper. I think it's just going to be the flow of money seeking opportunities. So should we get away from that green economy? I don't think so. I think that the market will decide it by itself.
Right. Okay. Please.
May I? I think the move towards a green economy is a first world thing, and a lot of the world out there isn't first world. They are more concerned with electrification, and that's going to drive the copper mining industry more than the move to a green economy. But also the move to a green economy is going to push demand for not only copper, but also a lot of other high-tech and critical metals, not limited to lithium, but including lithium and cobalt and rare earth elements and other things we haven't talked about here.
Right. And I'm trying to think of it from an investor's perspective. I'm trying to work out what are the things that we investors are getting wrong, or what are we reading into that perhaps we shouldn't. Because if I look at some of the kind of reboot or revamped stories that are out there, stories which were marginal in the past, which at these prices look like they could work, but I think you've all indicated that perhaps if the geology isn't there in the first place, it's never going to be a good project, and with rising costs, it offsets the rising price of the commodity. So, Mike, if I look at you, what should retail investors, high net worth family offices actually be focused on when they're trying to invest in a copper company?
Well, I guess like any investment, you need to point out the ups and the downs, the risks and the rewards in terms of investing. And clearly, investing in the mining space has its own set of risks and rewards. And I think going right back to first class of mineral economics, you look at the cost risk reward balance in the industry, and when you're looking at this value chain from discoveries all the way through to production, certainly there is at least some sort of track record in terms of your expectations of success. And if you're just trying to pick one project or one company that owns a project to invest in, then I guess it really, from my perspective, again, wearing my sort of junior hat here in Vancouver, you really need to think about investment from perspective of the type of investor and the type of project. And so certain investors are interested in the higher risk end of the value chain, if you will, which is the sort of discovery part of that. And they're not presumably going to expect that they're going to stay in that investment long enough to go through the value chain. They're looking at ways to actually monetize their investment at the various phases of this mineral supply process, basically, or the value chain. So there's those type of investment. If you're looking at investment in at the development stage, where you, like the projects I showed you there on my talk, then clearly it's really important to look at the geopolitical risks in terms of projects and where they are. And George mentioned water, for instance, and the interesting thing about water is that it's not only 100% required to mine and to process, whether it's desalinated water or borehole water. If there is no water, then there is no mine. But even if there is water, then water is probably the single biggest factor in dealing with ESG issues. So if I'm an investor, I'm looking at a project that could be built, I want to look at alternative uses for water, how that's shared with communities. Water is flashpoint, and if you can't get that social license, then you got to look at more than the tonnage and grade. You got to look at more than the IRR from a PEA or even a pre-feasibility study, because there could be some red flags in there associated with getting over that final hump.
Absolutely. Some good points in there, David and George. I know you want to kind of dive in there. So I'll ask you this question, and you can also talk about what you want to talk about, which is how again, do retail investors look at explorers and make sure they're not mining the market and that they can eventually get this thing into production? Because it requires big balance sheets with the right skill sets. And obviously, as David's highlighted, there's a bunch of hurdles to overcome along the way. So how do we identify what good looks like and what not so good looks like?
One of the things I look at a lot is the grade compared to the average grade of production compared to the cutoff grade. That margin must be sufficient enough to cover for all the errors we do that creep in at the economic study stages, at the pre-feasibility, at the feasibility, or just problems during operation. If your margin is too low, the minute your capital cost shoots up, you're in trouble. The minute your operating cost shoots up, you're in trouble. So do look at that margin between the cutoff grade and the operating, the average grade of the deposit. That is a definite thing that investors should look at.
Okay. David, I don't think you've had a chance to answer that same question.
I don't have a direct answer to that question, but I'd like to go just a little bit offside on that and say, something about one of the questions in the chat here that was, what do people get wrong? What do investors get wrong? And it may relate to this. I think they underestimate the risk that is inherent in any classification of resources and reserves. And they think a statement that we have 100 million tons of 5% or well, that's totally unrealistic. 100 million tons of 0.5% means that that's what's actually in the ground. And they don't realize that that's an inferred resource and it might be plus or minus 100%. And that has to go into some weighting of the risk in your investment in that project or in that company's stock who has that project.
Well, tell me about that. I would discuss that, because the assumption is that you go through your PEA, your PFS, your feasibility study, and then your DFS at the end, right? And everything becomes more certain as you go along that. And I had a conversation with a investment group 6 months ago, and said they've got out of 35 DFSs that they were looking at, 5 he believed. So, which is meaningful. You know, he was saying, I'm not putting my money towards 30 out of 35 of these things. They aren't real and they aren't honest. But us retail guys go, you know what? It's in black and white. It must be true. I mean, what's your experience of the success of economic studies as it pertains to copper? David, I'll go ahead hitting you.
Yeah, me personally, boy, I couldn't put a number on it like that. But you know, I would only believe 5 out of 35. But I do think there's more variability, more risk involved than we actually acknowledge. And as a geologist, the geological uncertainty can be awfully high and can relate to the deposit type too. And different types of deposits have greater complexity or greater continuity in terms of both their geometry and their grade continuity. So I don't see that taken into account very often. But at the retail investor level, you know, a geologist reads one of these things and they think, yeah, you know, that's what you think it is, but I know it's going to be more complex when you actually get underground. But somehow that doesn't translate through.
Yeah, interesting. And with regards to, you know, again, some of these bigger projects, I mean, gold's a very important byproduct here, but how much do the majors look at the gold byproduct for the viability of a copper project, George? I mean, just gives a sense of what that needs to look like.
Well, it's all part of the economics. If there is an economical component to the gold or to whatever other metal could be there, then we do consider it. You have to be careful that a mining company says, oh, this deposit has these elements and therefore we can recover them all and we can make money from them. No, that's, you know, it's not necessarily, it's never the case. And some of these elements might actually be deleterious. So there has to be a definite study of the metallurgy of the deposit, the mineralogy and the metallurgy to make this thing run. So yeah, if a byproduct is economical, definitely I'll add it to my cash flow. There's no doubt. Okay. I wish to add something to your previous question there. We design a project and we sit down and we say, okay, this is the feasibility study. All right, let's do it. And we know for a fact that capital costs, there's a tendency in the market to undervalue the capital cost. And you talk to a mining analyst at a bank and they'll do a sensitivity on it and they say, yeah, it flies. Well, no, it's the fact that the capital cost is much higher. It has much bigger impact. Another thing that investors don't look at, and they don't look at well, is the actual ramp up. How fast can you actually reach full production? can you actually reach design plate production? The speed at which you're going to ramp up is going to have a huge impact on your NPV. And one last thing I want everybody to understand: we do the feasibility study. We have all these static numbers in our cash flows. We build it. Okay, things don't come out as we think as we're building it. Then we start production. That metal price, the copper price today, is not at the start of production, is not the copper price at the time we sat down to do the feasibility study. And the mining engineers like me at the mine site are going to say, all right, given what we have today, what will we do? And from day one of production, the mine plan is different from the feasibility study, is different from the definitive feasibility study also. So, I mean, this thing is so dynamic. It's crazy.
Yeah, you got to put a stake in the sand at some point, but it's moving and very fluid indeed. Okay, so we're kind of running out of time on the Q&A. So, in fact, Mike, here's one for you. You sit on a few boards. You're all consultants in there. So, what are the questions that you think people should be asking before investing into copper plays at the moment? Because it seems like there are some big numbers, there are bigger projects out there. There's lots of exploration companies not getting the love and attention in the market at the moment at the exploration side of things. What do we need to know that we don't know, Mike?
Well, there's what you need to know about the project. You need to know or ask questions about where the project is with respect to both geographical situations and geopolitical situations. And some very basic flaws can arise simply from the fact that you've got no place to put your tailings based on topography. But you also need to think about, if you bring it down to the smaller scale player, you need to think about not just asking questions about the project itself and where it is, but who is driving the project. And clearly having, again, living in Vancouver where there are 800 junior explorers, probably about maybe 20% of them or so have some sort of copper project in their portfolio. If you don't understand the people behind the company, then that's the biggest fatal flaw of all. And so if you're doing your due diligence, sure, you want to do the due diligence on the project. Lots of projects look good, can only delve so deeply into geological reports, assuming again you believe them, as you started with this comment. But you can certainly do your due diligence on the people that are driving the project, and that's it should be a given if you're investing money in any company that you believe the people as much as you believe the technical reports. But sometimes I'm not sure that basic due diligence is done enough. It's like projects. If you look at mining projects, I mentioned in my report that they're highly skewed. You've got a lot of the value in a few projects. That's derived by nature. That's Mother Nature at work. As Dave said in his report, when you look at the distribution of deposits, some are good, some are high quality grades, some are big, and a few are both. And if you look at that, the distribution of geological quality in nature, I think in a strange way you see that on a human scale as well. That you're going to have a few really good teams that are running companies. You're going to have lots of average, and you're going to have a few that just are terrible. So, I think that the human aspect of investment is extremely important.
And I agree with that. Look, I'm getting people waving at me frantically to keep this thing moving. Gentlemen, thank you very much for your time. Boyd Davis at MetSoc and Association of Crux Investor put together the best people at what they do in the industry. This panel's been no different. I want to thank David Love, George McIsaac, and Mike Doggett today. Truly insightful. Thank you for your time, gentlemen. And now I'm going to hand over to Philip Mackey of PJ Mackey Technology, also a stalwart in the industry. He's going to sort of talk through primary processing of copper.
Well, good morning, everyone, for day two. This is the second slot on day two, and we will be talking about primary processing of copper. Now, for this, we have three speakers. I'll be doing a brief introduction, and for the three main processing steps, mineral processing of sulfide ores and concentrates, that'll be Joe Pearce of Mineralis, Australia. He'll be first. Then we'll be talking about sulfide processing and the concentrate value chain and smelting. Dr. Cam Harris of Canada will be doing that slot. And then finally, oxide processing of copper. Professor Juan Carlos Salas at the Catholic University in Chile. By way of introduction, primary copper is produced from sulfide ores. It's about 80% of primary global demand by of course, crushing, milling, flotation, smelting, electro-refining. And oxide ores, about 20% of global copper, via leaching and then electro-1 copper production. In terms of smelting, a captive smelter, about 35% of total smelters, it's one located at an near a mine site. A custom smelter is located away from a mine, typically near a port, and it treats a range of many different concentrates. There are about 100 large copper smelters in the world today of both types. Conveniently, with few exceptions, all the new mines that we will hear about, we heard about yesterday and today, all those junior companies will make concentrates. They will ship their concentrate to a distant custom smelter, either in Asia or in Europe or maybe in North America. There are very few new captive smelters built today because it's far cheaper for these juniors to ship their concentrate to an existing plant. For info, the most recent captive smelter is the large Kimona copper smelter in Kolwezi, Congo. That's now under construction, actually, by Outotec and Ivanhoe Mines. So just introducing the speakers again, we'll have Joe Pearce, we'll have Cam Harris, and Juan Carlos Salas. So I'll introduce, so now the floor is open to Joe. Thank you very much.
Hi there, my name's Joe Pearce. I'm going to talk about mineral processing in the value chain. I have about 40 years experience in the minerals industry, mostly in mineral processing, and that's in production, in operations management, research, and technology development and commercialisation. So first of all, where does minerals processing fit in the value chain? Well, you know about mining the ore. Now, typically a copper ore might be about 1% copper disseminated throughout the rock in minerals. Now, three minerals I've listed here. Chalcopyrite is probably the most common copper sulfide mineral. It assays about 34% copper. Pure chalcopyrite is about 34% copper. Two others there, chalcocite, which is a very high-grade copper mineral, and one called enegite, which is quite high-grade, but has another element there called arsenic, and we'll talk about that later. That's the ore. So the ore goes to the concentrator, and the aim of the concentrator is to physically separate those minerals that naturally occur in the rock, physically separate them into a higher grade concentrate. Typically that would be about 25 or 35% copper, depending on the natural mix of minerals in the ore. So mineral processing does not make any chemical changes, it's only physical extraction of the natural minerals. Physical changes happen later in smelting and refining. That's where it's chemical processing of those minerals to produce very high quality copper for electrical and other applications. Now, I've mentioned a few minerals there. Today I'm just going to focus on copper sulfide minerals. There are naturally occurring copper oxide minerals. They're usually processed by leaching, and also sometimes some of the sulfides are as well. That's going to be covered by Juan Carlos later. There are three steps in mineral processing. First of all, liberate. You have to liberate liberate those minerals that occur within the ore. within the rock. Once they're liberated, you then have to separate the minerals from the rest of the rock to make that high-grade concentrate to be sent for chemical smelting. But then on site, you have to dispose the waste, what's left over. And that's why mineral processing is always near the mine. So maybe only 3% of the mass of the ore is transported to smelting. The other 95% is site waste and goes to disposal on site. Smelting is usually done in a central facility somewhere overseas, Asia or other Europe, other industrialised countries. The reason for that is they need to be close to the markets for the copper metal and also sulfuric acid, because the volume or the tonnage of sulfuric acid that's produced is as high as the tonnage of concentrate that's produced. And so that product needs to be close to a market, an end user. I'll go through those steps in a little bit more detail. The first step is liberating the ore. Now there's liberating the minerals in the ore. Now there's several stages to that. First of all, coarse crushing in this sort of crusher device. That's done dry, and it takes rocks that may be a metre size or thereabouts down to somewhere between 20 and 300 millimetres, depending on what the downstream process is. That has to be applied to the full stream of ore. We then take that product and we further crush it and grind it. A couple of stages of that. The first stage will be in, you might have heard of SAG mills or semi-autogenous mills. That's wet grinding, or sometimes it's done in dry grinding, high pressure grinding mills, or HPGRs. The aim here is to further crush the rock down to about 2 millimetre size. That's still not fine enough for processing, so we need a second and sometimes a third stage, usually done in ball mills. That is, we're now in a fully wet grinding. And we're grinding now to about 0.2 of a millimetre, 200 microns. So SAG mills and ball mills are really the same principle. Inside these big cylinders that rotate, and they rotate large steel balls. They pick them up and drop them at height onto the pool of slurry to pulverise the slurry. Now, this is applied again to all of the feed, all of the rock that's mined. This product here, this 200 micron product, can now go to the first stages of processing. Within that processing, sometimes we take a smaller stream and regrind that much finer. Again, that's wet grinding, but now we're trying to apply that high energy in a very fine grind to maybe only 5 or 10% of the feed. But by now, that 5 or 10% has most of the copper. And the grind size here could be, depending on the minerals, it could be 0.02 to 0.05 millimetre or 20 to 50 micron. So it can be very fine. So just some features about comminution, which is what that crushing and grinding stages are called. These primary crushing and grinding stages on the full stream are usually the highest capital step in processing, and also the highest users of energy and the highest cost factor. That means they're normally the site bottleneck. The site is designed around and operates up to the full capacity of that grinding and crushing installation. Now, the throughput of that material, the throughput of that equipment is determined by the rock type. So the 97% of the rock that is not mineral determines the throughput of the bottleneck. Once we get into the finer regrinding stage, which could be within processing or flotation, here the grind size is determined by the copper minerals, which is the 3% of the ore. So this photomicrograph here is, you can see the size is about the whole screen of depth there is only about 500 microns, 0.5 of a millimetre. And that's the size of the particles or the minerals we're trying to separate from each other. You can see some are quite evenly associated with each other, and they may need very fine regrinding to liberate those minerals from each other. That, you can imagine, is very high energy per tonne, but fortunately it's on much lower feed tonnage because we've already got rid of maybe 97% of the rock that doesn't hold the minerals. So the general principle in minerals processing is to grind the full stream as coarse as possible, as coarse as you can get away with, to reject most of the rock. And just process that to make what we call a rough copper concentrate of low tonnage. And when we've got that rough concentrate, we regrind that as fine as we need to make a saleable final concentrate. So from the liberation, the grinding, the crushing, we now move into the separation stage. Now, almost exclusively in copper, that's done by froth flotation. In flotation, the principle is to use chemicals. It uses chemicals, but it's important to restate there's no chemical changes to the minerals, but we're using chemicals to make the surfaces of the target minerals hydrophobic. That means they'll stick to air bubbles. If they stick to the air bubbles and we blow froth, we blow air bubbles through the slurry, the hydrophobic particles, the copper minerals that we're after, attach to the bubbles and rise to the surface and be removed from the froth. So the froth is our concentrate, and the tailings, what doesn't attach to bubbles, is the waste, the tailings. It's a really neat process, but it's not perfect, and we have to repeat it over and over again to get good enough results. I'll just describe it. If you want to see flotation in action, do it at home. There's a little party trick. You get some peanuts and some sultanas. You can put them in a beaker, add water, and you see they both stick. They both stay at the bottom because they're both heavier than water. If you pour soda water into that beaker, you'll see that the peanuts float and that the raisins stay at the bottom. Now, the reason is because the peanuts are greasy, they're hydrophobic, they attract air, or they want to attach to air, and the bubbles in the soda water attach to the peanuts and rise and lift them even to make them lighter than the rest of the water. Now, in real flotation in plants, the particles are much, much finer than the bubbles, but the principle is the same. They get buoyancy from the air. Okay, so we've liberated the minerals, we've floated them to separate them. Now we have to dispose of the 97% of the ore that isn't valuable. That waste is mostly stored in the site tailing dams. And everyone, I'm sure, is fully aware of the issues that may be associated with tailings, perhaps long-term acid drainage, possibility of contaminating the groundwater, retaining water in the tailings that we really would prefer to use back in the process, so you don't need to use new water. And of course, some very high-profile and tragic dam failures in recent years. That has increased the industry emphasis and the regulator emphasis on filtering and dry stacking of tailings, and also reuse of those tailings in other duties. So I'll first talk about filtered tailings. Clearly, it's a better, longer-term solution. It stores the tailings in a form that's easier to keep stable. It can be mixed with coarse waste from the mine as well. There is some downside. It is higher capital and operating cost. Filtering tailings is actually quite difficult and expensive. And the site bottleneck may move, what has traditionally been grinding, the site bottleneck may move to the filtering. It may determine the throughput of the plant. And a very minor clay content can seriously slow down the filtering rate. So if you're going to look at dry filtering of tailings or invest in a mine that's going to do it, you really need to understand what's the content of clay in the ore or the fibrous minerals in the ore. Not only what the average is, but how does that vary? Because if it varies unexpectedly in 1 month, it may significantly lower throughput for the plant that month. I guess the other area that's talked about a lot now is the reuse of minerals in the tailings for other duties. Unfortunately, it's not quite as easy as it sounds. So if you look at something like construction sand, there is a lot of sand in tailings and a lot of silica, but if you're going to use something in construction, it has to meet construction quality. So if there's any sulfides in the ore, and there will be, they have to be removed. Any metal content, you can't put that in an industrial building. Sand, for cement needs a specific size distribution, and to do all this would require actually significant, difficult processing, possibly harder than making the copper concentrate. Then that would be harder than making the sand. So it's likely that it'd be, if you were trying to make sand, this is not a place you would normally start. There's also the issue of, over time, standards change. There have been times in the past where a product was thought to be safe, or was safe at the time, used on railway tracks, used in kids' playgrounds, only to find out in 50 or 100 years' time the standards have changed and the metal content in those deposits is no longer acceptable and they have to be removed at significant cost. So the question that a company must consider is not is that other use of the material safe now, but will it be considered safe in perpetuity? Otherwise, we have an unknown risk in the future. I'm just going to talk now about, you guys know, if you're investors in the mining industry, you'll know the general characteristics of the mining industry. We have an uncertain resource, even a highly drilled deposit. We've only actually seen about 0.01% of the ore body. So there's risk in there. There's very long lead times in building these operations in remote places, and they're very high sunk capital in a captive location. The owners have no pricing power, they're taking country risk and political risk. The installations are exposed to natural events, weather changes, ground movement, and our mines and our production plants are usually, unlike manufacturing, they're usually single line production, they're high rate, they're extremely arduous to do. We're crushing hard rocks from a couple of metres size down to finer than a hair. That is hard, arduous duty. It has to work all the time, and there's complex feedback loops between different bits of equipment. So when people talk about, oh, we've got a new technology, we've got a minimum viable product, and let's fail fast, or we've got a beta version of something, that's simply not an option on a mine site. As it is not for an airliner or building a bridge or building a dam, failure is not an option. You have to get it right, because when you put something in that duty, it has to work on a hard duty and it has to work all the time, around the clock, or it will shut down the whole site. So there were general industry characteristics that I'm sure you're aware of. I'll just talk about some mineral processing specific characteristics. Now, I guess it's a truism. Every ore is different, but also every ore is variable. So this is not manufacturing. Where manufacturing can specify its input and therefore set up a process to operate within close boundaries. In designing a plant, you have to assume that you aren't sure what the feed is going to be tomorrow. You certainly don't really know what it's going to be in a couple of years' time. You broadly know, but what you mostly know is will be variable. And the things that are most important to know, the mineralogy, the actual micron size, distribution and texture of the minerals, and the surface chemistry of very fine particles and flotation, they are the things, they are the root of the process. We can't measure them online. We can measure them offline. It takes a lot of effort, it takes a lot of rigor both to measure and interpret it and to make conclusions. We can do it offline, but we can't measure online. So I guess that as an investor, beware if people are promising shortcuts to solutions, they say, or big data or artificial intelligence or data analytics will improve our production. Maybe they're right, but first ask, can they explain what is that doing to the minerals, the texture of the minerals, how's it responding to them, how's it responding to the surface chemistry of the particles? If they can't answer that question, then perhaps they're like the apocryphal drunk looking for his wallet under the lamppost simply because that's where there's light. That's where they have data, so let's just increase the amount of light and see if we can see it. But the answer isn't there. The answer will always be in the minerals and the chemistry. So as an investor, I think some issues to look for in minerals processing, the rock type, the hardness of the rock, that will determine the cost and the throughput rate of the common nuisance circuit, which is the highest capital process. And particularly if the mine is going to fill the tailings, You want to know about the clay. Is there clay there, and how might that affect the filtering rate, which would then affect the capital and the throughput as well? What are the type of copper minerals there? Are they sulfides? Are they oxides? What type of sulfide minerals? Because I mentioned anagite before. It sounds juicy. It's 48.6% copper, but it's also 19.1% arsenic. And because it's within the mineral chemistry, within the lattice, there's nothing mineral processing can do to change that. That can only be changed in smelting. And that's why some of the high-grade copper deposits that are well known are not yet developed, because they would just put too much arsenic in the concentrate. You also want to know about the grain size of the minerals. Remember this 4.5 millimetre scale, you want to know, what do the copper minerals look like? What do the impurities look like at the scale? How fine am I going to have to regrind some of these particles to liberate them so I can then separate them? That's part of answering the impurity question. So you really want to know about impurities like arsenic, fluorine, uranium, bismuth, antimony. There are others too, but they're the main ones. In low levels, and I know this would have been talked about yesterday, in low levels that will cause penalties. You can live with the concentrate penalties. But at high levels, you may not be able to market them at all. Or you may not be able to transport them. So for example, if uranium is over too high a level, and it is often associated with copper deposits, not at an economic level, but enough to deem that concentrate as a radioactive material. If it's deemed as a radioactive material, you're in a world of pain in transporting and processing the concentrate. So, like everything in minerals processing, it's not so much about the average, though the average is important, but it's also about the variability. If it doesn't matter if uranium is usually under the limit, if occasionally you exceed the limit and you have a radioactive substance, that concentrate will be called radioactive from now on. Now, I marketed technology for many years in the minerals industry, and I guess I can say with some confidence, beware of promises of a breakthrough technology, some technology that's going to enable a major change in an operation. It's possible, it happens. But in many cases, the technologies can look good at a small scale. The question is, how do they survive at the large scale? We have extreme events that affect mines. We have the day in, day out duty of crushing and processing hundreds of thousands of tons of hard rock, and you have to do it consistently and repeatedly. Perhaps there's a dinosaur and the new technology is better than the old dinosaur and we replace it. Or perhaps the technology is actually a highly evolved survivor, and if the new technology is not as rugged and as effective a survivor as existing technology, it may work at small scale, it may be better, but the proof of the pudding is how robust is it, how operable is it at large, continuous, full scale. Thank you.
Hello, my name is Cameron Harris. I'm the president of Canadian Engineering Associates. We are an engineering company that services the non-ferrous smelters of the world. I'm here to talk about the next step of sulfide processing, specifically copper smelting. So everything to date has been a physical transformation. The smelter is the first chemical transformation. A copper smelter is a large oxidizer. So the first step in the smelting process is the oxidization of the iron sulfide contained in the concentrate, which produces iron oxide and SO2, called the smelting step. The second step is the oxidation of the copper sulfide with oxygen to produce liquid copper and sulfur dioxide. The tonnage oxygen required to do this is produced in a cryogenic air separation plant. And the way you mix that tonnage oxygen with the concentrate varies in physical configuration. For example, a flash furnace blows the oxygen and the concentrate through a vertical or horizontal burner. A top submerged lance technology blows the oxygen down a lance into a bath of the molten sulfide. There is a number of other bar smelting reactions that blow the oxygen through nozzles in the sides or the bottom of the vessels called tuyas or injectors. But all of them in the first stage make iron oxide, which unfortunately is a solid if you don't do anything with it. So the second thing a copper smelter must do is it must be a slag maker. It takes the iron oxide, reacts it with the flux. In the case of copper smelting, it's silica to produce a slag called phayolite. And this slag is liquid at appropriate temperature to allow a separation between the liquid sulfides and metallic copper. So the next thing a copper smelter is as an impurity manager. It recovers the good metals like the gold, the silver, the platinum group metals to the copper. It gets rid of recovers the less desired elements, the lead, the zinc, arsenic, bismuth, et cetera, to slag and dust. But unfortunately, it also tends to lose some of the metals you'd like to keep, like cobalt, some of the nickel and others. So the last thing a copper smelter is it's an emissions controller. The SO2 goes to a sulfuric acid plant. Fugitive emissions get collected and scrubbed and sent to precipitates for landfill. So what are major facts about a smelter? The size of them, they really need to be treating over about 1 million tons of concentrate or making more than 300,000 tons of copper to have the economies of scale to be competitive. That number is actually more like 1.5 million, going to 450,000, frankly, for a greenfield project. What type are they? They're either captive or custom. Captive treat their own concentrate from their own company. Customs treat concentrates from other producers. The vast majority of the world is a custom business now. Where is it done? China is dominant. It's all in the custom business. Japan's still a major player in the custom business. Chile has a lot of copper mines and they make a lot of their own copper, so there's a lot of captive business there. And Russia's a major player, so there's a mix in Russia. So just looking at what I just said, China, as you can see, is completely dominant. About 6 of that 7.3 million tons of concentrate, copper comes from imported concentrate. Japan's pretty well all imported concentrate as well. And Chile, about 1 million of the 1.2 million is in fact captive by Codelco treating their own concentrate, and Anglo to a small extent. And Russia is along the ride there with the mix. So how do smelters make money? It's from 3 ways. Treatment charges. They charge for every ton of concentrate they treat. They charge penalties for the deleterious elements like the arsenic, so dollars per pound of arsenic that they have to cope with. But most importantly, they make a metal gain. They pay for a certain amount of the values in the concentrate, and they normally recover more than what they pay for. So there's some profit in there for them too. So recovery is a very important topic. Each type of smelter has its own characteristic blend of recoveries. But most of them are not good at a variety of metals. Cobalt, molybdenum, zinc is frequently valueless in copper concentrate, for example. Nickel's not great. You get some, but not a lot. Fortunately, it's very good for gold, and silver and PGMs are pretty good as well. So that's a positive side. The difficult elements like the bismuth, antimony, arsenic I mentioned before are a problem for the smelter to cope with, but they are a source of penalties, so they're not necessarily a bad thing for a custom smelter. But the most important thing to understand is not all smelters are created equal. The recoveries vary between the types of smelters, and you must understand the process to actually understand what a concentrate's worth to a specific smelter. So concentrate blending is everything for the custom builders. The correct cocktail is required for each individual plant. You know, the big ratios, iron, sulfur, and copper are very important because that affects like the copper production, the acid production, the amount of tonnage oxygen you need, and the overall heat balance and running of the plant. So that's obviously the big one. The minor elements are important too. The bad ones can affect your anode quality, They can affect the toxicity and the difficulty you have of dealing with your slag and the precipitates that you produce, and emissions, of course, if you have things that get into the atmosphere that aren't good. Beryllium in for plant hygiene, for example, are not helpful. But there's also the good contaminants, the gold, silver PGMs I mentioned before. The amount you can take in a copper smell is kind of not limited. There's really no limit to the amount of gold that they all consume, which is a good thing. There's also other contaminants in the feed, like aluminum, magnesia. If your concentrate's full of, say, talc, that can be a real problem and not be able to treat it in certain smelters. So the big thing is what you can put into a smelter is highly dependent on what they're already treating. So all concentrates aren't attractive to everybody. Nobody right now wants arsenic. There's a lot of it about. This is just a growing problem. The next thing, environmental considerations. This is a big deal for smelting. The stack emissions look bad and they seem to be a problem. They're actually, in a way, not so bad because you can contain the gas, you can control it, you make acid with it, you scrub it, you can deal with it. The really troublesome one is the ground level emissions, the stuff that's leaking out of the building, which is uncontained. To control these very large flow rates of treatment is required, and this is going to be an ongoing, growing expense, and expense is the word. It'll be cost a lot to deal with that. Water is interesting. The big problem of water is coming from the acidic blowdown from wet gas cleaning. It needs to be neutralized for this acidity to make, in inverted commas, clean gypsum. You need to precipitate the metals, normally with lime, up at high pH. You often need ferric treatment to clean up the last little bits of, say, arsenic, so the water can be discarded. And then, because people are recycling more and more of the water, you have to also do something like reverse osmosis to remove the sulfate so you don't get scaling all through your plant. And finally, stormwater runoff needs to be completely contained and treated back through your effluent treatment plant more and more under a mandate. So the last one, solid environmental considerations. Acid mine drainage comes off slag piles. People say, let's put it into cement. That's way more limited than you realize, so don't think that's going to save everybody. The last one, as I mentioned, clean gypsum before. Clean gypsum's not clean enough to sell to everybody. It's very contaminated still. So that's also not an out. You're going to have to find somewhere to put that stuff. And dust that we mentioned before, it's highly contaminated. And the only thing you can do it is landfill it, or if you're lucky, you have another smelter that can take that dust. So energy recovery, quick word on that. Energy recovery is very sexy, but caution is required. It adds a lot of complexity to the operation of your plant. It can be a source of downtime due to maintenance. You need skilled operators, and it costs a lot of money to run it. So here's a smelter. Here's the bit that does the smelting. Here's the bit that does the heat recovery. That's a lot of equipment to be running to make some steam and electricity. So just caveat emptor. The benefits are often overstated, and it's not necessarily commercially justifiable. So some conclusions. Sulfide metallurgy, pyrometallurgy is complex, so you need to have an expert knowledge to be able to actually assess the value contained in any given concentrate. So this is very important. Environmental compliance is the tail that wags the dog. If you look at the capex and operex of a plant, dealing with the gas, dealing with the water, dealing with the slag is often far more expensive than the actual smelting itself. So that's just the way it is. Energy recovery seems like a good idea on paper, but you need to think about it very clearly. Sometimes it's smarter just to throw the energy away and buy power off the grid. Final comment, an aside, not really part of my talk to date, but I must emphasize there is a chronic skill shortage in the West. There are not enough metallurgists around to run this plant as we're going forward in time, so we have to start expending money, training people, and keeping grey hairs like me around, sadly, to teach paper, amusing to read about how you sell concentrate. The second one is the Bible on copper, that if you're interested, I would recommend you reading. Thanks very much for listening. I hope you got something out of this. Bye for now.
Thank you very much, and I appreciate the opportunity of sharing some concepts about copper hydrometallurgy with all of you. My intention in this presentation is to cover in a very broad view the main, or I would say the most common aspect of copper hydrometallurgy. In a general view of the copper mining industry, from mine to cathode, we identify two main processing routes. The sulfide route, which is on top of the slide, that goes through concentration, smelting, and electrorefining to finally produce a copper cathode. The oxide processing line instead uses a different path through leaching, solvent extraction, and electrowinning to produce cathode of similar quality and characteristics. Mixed ores, which might have sulfides and oxide, obviously can choose what route they prefer to follow. Note that there is a connection between those two paths, as sulfides can also be treated by hydrometallurgical processing, either as ore or concentrates. Another aspect that is worth to note is that while in the sulfide ore route you can have intermediate products or byproducts like molybdenum concentrates, or you can sell concentrates, or you can sell anodes. In the case of the oxide line, there is no such option. It goes straight from oxide ores to copper cathode, and it's very rare to find intermediate byproducts. So, what is the relevance of hydrometallurgy in copper production? According with the International Copper Study Group, hydrometallurgy accounts for about 19% of the mined copper produced in the world. Mined copper refers to new copper produced from mines, and it excludes copper from recycling. Smelting and electrorefining is still the dominant process option, given that the majority of the ores are sulfides, but hydrometallurgy do have a significant role in the copper market. The main aspect of hydrometallurgy is leaching, which is the process of solubilizing the element of interest, in this case copper. And there are different mechanisms depending if we're dealing with sulfides or oxides. In the case of oxides, nature already has done the oxidation of the sulfur, and consequently for leaching, in general, is required only some acid, sulfuric acid mostly, to solubilize the copper. In the case of sulfides, however, it is necessary to oxidize the sulfur. Then an oxidant is required, in this case oxygen, and the oxidation of sulfur generates sulfuric acid. Thus, oxides consume more acid than sulfides, and we will see this is a very relevant issue in terms of cost for the processing. In terms of unit operations in the hydrometallurgical process line, three main unit operations are identified: leaching, solvent extraction, and electrowinning. In leaching, the element of interest is solubilized by a leaching solution, usually an acidic solution with sulfuric acid. Unfortunately, in this step, some impurities are leached along with the copper, contaminating the solution. Then, solvent extraction fulfills two objectives: concentrate and purifying the solution, generating an electrolyte suitable for the downstream processing. This is achieved by using an organic reagent which is selective in extracting preferentially the copper ion and leaving the impurities behind. Finally, electrowinning makes the reduction of the copper in solution to metallic copper as copper cathode using an electrochemical process. Note that in this process, there is a net transfer of acid from electrowinning to leaching, and of copper from leaching to electrowinning. In terms of reactors, the most broadly used is heap leaching, in which ore that has previously been prepared by crushing and agglomeration, for example, is irrigated from the top of the heap with the leaching solution, which is refined, and collecting the pregnant solution at the bottom. There are two options on heap leaching, dynamic or permanent. In this slide, what we're seeing are two approaches for building dynamic heaps. One is for small-scale mining, which uses just trucks and front loaders, and another on the right is for large-scale operations where more mechanized equipment is used. In both cases, certainly the base of the heap is covered by an impermeable geomembrane. These two pictures illustrate a characteristic of heap leaching, which is it can be applied for small-scale operations economically as well as for large scale. The other option, which is permanent heaps, every heap is built on top of the already processed heap and not on a new space. In terms of operational cost, here we can see some typical cost distribution for some oxide leaching operations in Chile. The average cost is somewhere between 0.9 to 1.2 US dollars per pound of copper. And major costs are in leaching because of the cost of the acid mainly, and in electrowinning due to the cost of energy. One issue to keep in mind regarding the cost of acid is that acid consumption is a property particular to each ore body, as it depends strongly on the characteristics of the gangue which accompanies the copper mineral. The presence of species like carbonates that are net acid consumers will increase the specific acid consumption. Then, as you can see on the slide, you can have ores that might have an acid consumption as high as 55 kilos of acid per ton of ore, or as low as 10 kilos per ton. The point of on the right, which is in green color, is the acid consumption for a sulfide or leaching operation, in which case, as we said, the sulfide might generate some acid, and consequently the consumption is very low. So in summary, LIX, SX, and EW is a processing route for copper oxide ores, as well as in certain cases for sulfide, which relies on the solubilization of copper from the ore. It can be applied, as I said, to sulfide and oxides. The preferred reactor is heap leaching, even though there are other alternatives, and this option may be used for small or large scale operations. And the main costs to be considered are sulfuric acid for leaching and energy for electrowinning. Thank you.
Hi, my name is Mike Moats. I'm a professor of metallurgical engineering at the Missouri University of Science and Technology. I'm affiliated with the Thomas J. O'Keefe Institute of Sustainable Supply of Strategic Minerals. And I'm going to talk today about copper anodes, cathodes, and critical minerals. In the series you've been having, we've talked a lot about how copper is produced and whether or not it's from ore or from scrap. We either go through a pyrometallurgical process or a heap leaching process. But at the very end of all those processes, when we make high purity copper for sale to the warehouses or to downstream processing, we'll end up in electrolytic steps called electrorefining or electrowinning. It doesn't matter what happens in the front part of the process is we always end up making high purity copper by one of these two electrolytic processes. You know, copper electrorefining, which 80% of the world's high purity copper is produced through, we take impure copper anodes that come from the smelter, we dissolve them into an electrolyte, and we plate out high purity copper. And we do this in facilities called tank houses. We provide an electrical supply to drive the reactions in the directions we want. One of the important things in electrorefining is that the impurities that are in the original anode, which are about 99% purity, will then either enter the electrolyte or will stay solid and will become anode mud or anode slimes. These anode slimes are valuable because this is where the gold and the silver and the platinum end up. This process is fairly energy low intensity, and so it's only about 0.4 megawatts per ton of copper produced. Here's some images of what a tank house looks like and how we transform 99% pure copper into 99.99+% copper cathode. Anodes are provided from a smelter. These anodes are prepped through a machine to make sure that they hang vertically straight in their tank house. The anodes then are placed in cells throughout sections in a tank house. In each cell, we have anodes, and in between each anode, we have a cathode. And so the anodes dissolve over time as electricity is applied and cathodes are produced. The cathodes are then harvested every 7 to 10 days. Those cathodes come out and are taken off their starter sheets of copper, or they're taken off stainless steel blanks. And then we make bundles, which are then sold to the warehouses. The anodes are removed every 21 days, or approximately, and the residual scrap is sent back and melted into new anodes. But before they're sent back and melted, these black or gray slimes that are attached are washed off, and this is where the gold and silver and platinum are. Some of the slimes fall off into the bottom of these cells, and they are also collected when the anodes are removed. Here's some data about what a copper anode looks like chemistry-wise. This is data from about 30 different refineries around the world, and these are average values. So you can see that a copper anode material is about 99% copper with a lot of impurities. Many of these impurities are what called penalty elements, and they're charged, mining companies are charged against them when they sell their concentrate, because in refineries it costs money to treat and remove them. So elements like arsenic, antimony, bismuth, lead, selenium, and tellurium. These elements are also now what are called critical minerals or elements, and we'll talk more about them later. Besides the chemistry of an anode, other things that refineries care about are like molar ratios of arsenic to antimony plus bismuth. For technical reasons, this value needs to be greater than 2. Other refineries have other ratios, such as silver to selenium or lead to arsenic, that matter to those refineries. And so depending on where you're selling your anode copper, each refinery has its own criteria. In general, anodes are also sold based on physical characteristics. Refineries want no cracks, no blisters. These are bubbles on the surface of the anode. We want anodes to have uniform weights and dimensions, which improve the processing and allow for more efficiencies during the processing of the copper anodes. Also, when you're doing casting of anodes, we apply a mold wash to allow the anode to pop out of the mold, and we want to avoid excess mold wash. Over time, the anodes have gotten dirtier as the concentrates that are coming out of the mines have become more complex and contain more impurities. And so here's some data from some copper surveys that have been done over the last 30 years or so. And you can see in general that the anodes are getting dirtier. As we've talked about, as you dissolve an anode, some elements go into the slimes and some go into the electrolyte. And so this is just a table to summarize that the gold and silver essentially goes all to slimes, as does the selenium, tellurium, and lead. The group 15 elements, arsenic, antimony, and bismuth, some go to the slimes, some go to the electrolyte. And so we need to be able to, one, recover the slimes from the valuable materials, but then we also need to treat the electrolyte to recover, to make sure we produce high purity cathode. Here's some data from the slimes that we generate. And you can see that the value of the slimes are in the gold and the silver. You can see that it's on average about 9% silver and 1% gold. And then there's also significant enrichment of selenium and tellurium. Tellurium is coming from copper slimes is the main source of tellurium for world production. The slimes are removed whenever the anodes are removed, which is on average 21 days. And you can see that the average amount of slimes per ton of anode is about 5.5 kilograms. Obviously, we're refining to produce high purity copper cathode. The copper cathode is sold to warehouses or to downstream processing plants who make typically copper rod, which goes to copper wire. I've shown here the ASTM grade 1. There are various grades around the world that are allowed into the LME or COMEX warehouses. But generally speaking, we have values that the chemistry needs to be less than these compositions. And from our surveys, the data from 1999 and 2016 are shown. And what you can see is that by far the average composition of cathode is much greater than the LME grades that are available. Finally, some general trends about electrorefining. As we've already pointed out, there's going to be a longer-term trend of the need to treat dirtier anodes. This is due to declining ore grade. To maintain that arsenic to antimony bismuth ratio, there are some smelters that need to dope with arsenic, and so that makes potentially a problem because it's a hazardous element. As we look to the future and we see more circular economy, we're going to see anode chemistry changing as we see more copper scrap in the copper supply chain. This will require more electrolyte treatment demands. Finally, the opportunity to capture critical elements. These build up in the electrolytes and in the anode supply. Ideally, this would allow us to build a more resilient supply chains. And it may be that governments require this as part of the social license to operate in the future. Just to give you an idea of how much of potential is there, we've recently published some work on this, looking at selenium, tellurium, arsenic, antimony, and bismuth. And in this table, we show that what we estimate the world potential of these elements in copper anodes are in 2019, and what the world supply of those elements are worldwide. And so you can see that we can supply a lot of the selenium and the tellurium. Actually, we could produce a lot more from the copper anode slimes than what is currently being produced. Just to give you an idea of a copper refinery, the revenue coming from a copper refinery and what the critical minerals might look like. 3 refineries here in the United States were examined. You can see that basically with the dollar figures we used, about $1 billion of copper, $100 million or so of gold, $40–50 million of silver, and then these critical elements, while maybe millions of dollars, are substantially lower, which is one of the reasons why we don't capture them all, is because the economics at this point are not viable. Finally, the last electrolytic process, electrorefining, which is 80% of the world's copper production, 20% comes from electrowinning. Electrowinning is the end of a hydrometallurgical process. In electrowinning, what we do is we take solution that is rich in copper, we pass it through cells, we plate copper on a stainless steel blank, and we use lead anodes to break down water, evolve oxygen and acid. And so we are winning copper from solution. So this is typically done at the mine sites. So this is a picture of a mine in Arizona where you can see the mine is digging down the side of the hill, transferring crushed rock over to a heap leach, which will eventually go to solvent extraction and then electrowinning. We see electrowinning cells are either open or covered with hoods. The hoods are needed because of the oxygen gas that's evolved, creates a mist that contains sulfuric acid, which is hazardous to the workforce. Every so often, every 5 to 7 days, copper cathodes are harvested. The lead anodes stay inside the cell for 3 to 4 years. The stainless steel comes over. We have harvested the cathodes. The cathodes are then bundled up and shipped to wherever it's being sold. A lot of words, but basically we win copper from solution in electrowinning. We take rich copper solution, which is coming from solvent extraction or direct leaching of matte or black copper. And electrowinning is sometimes selected instead of electrorefining for processing scrap, because I can get to the precious metals in leaching in, say, less than 12 hours versus 21 to 28 days in electrorefining. The anodes that are used are some sort of lead alloy, which means we generate a hazardous byproduct which has to be recycled. We also have mixed metal oxide titanium anodes which are used, which reduce the energy consumption, but because they use iridium oxide, they tend to be expensive. Again, most electrowinning facilities, electrowinning tank houses produce grade 1 copper. The main impurities are lead and sulfur, the lead coming from the alloy of the anode. And so to minimize the corrosion, we use cobalt to minimize the lead corrosion. The energy consumption of electrowinning is much higher than electrorefining, but we never select based on that. We always select based on the previous processing steps. So in summary, the process to produce grade 1 cathode depends on the original copper source and the presence of precious metals in that source. From primary sulfides and from scraps, we typically use electrorefining. From primary oxides or sulfides without precious metals, or to treat scrap to liberate precious metals quickly, we'll use electrowinning. In electrorefining, we produce slimes that produce significant quantities of gold, silver, and tellurium, and the recovery of other critical elements may occur in the future. The cathode copper is almost always high purity, greater than grade 1. The anode copper continues to increase in impurity content. So the disposal of penalty elements is important, and it may be a source of critical elements in the future. Thank you for your attention.
Hello, my name is Jonathan Barnes. I'm Principal Analyst for Copper Markets with Wood Mackenzie. I'm very pleased to be invited to present here today, and I will be talking about end-use markets for copper. It's a fairly brief presentation. We'll be looking at the end-use markets of building and construction, utility network infrastructure, industrial machinery and equipment, transport equipment, heating, ventilation, air conditioning and refrigeration, known as HVAC equipment, other equipment and miscellaneous markets, and finally we'll wrap up with a summary and some conclusions. Now all the slides you'll see will be more or less in this same generic design. So top left you have a sort of picture of the major sort of application areas within these end-use markets. Then bottom left, the main product lines that are being absorbed in these applications. Top right, you'll have a pie, and all these pies refer to the global market data for 2020, giving a share of its global importance and some metrics in terms of demand in terms of million tons. Unfortunately, this is 2020 data. We won't have the 21 data for some time. And then lastly, the bottom right slide, some characteristics of the market. So beginning here with building and construction, obviously there I have a picture of some tower blocks in China. Obviously the major product lines that are going into this application are really primarily building wire for residential construction, power cables for industrial projects, LAN, so local area network cables in offices, plumbing tube, brass rods, bars and sections. You're really using that in taps and connectors in plumbing systems, castings also used in taps, and other miscellaneous copper and brass semis. For 2020, this accounted for around 28% share of the global market, or 7.7 million tons. Some of the characteristics of this market, well, it's clearly quite a cyclical end-use market. At the moment, we've seen very healthy demand in the US and Canada, but if we looked across at China at the moment, obviously construction markets there are quite depressed. So this does vary a lot between geography. It's different ways we can really break this market down, but one of the most common is to really look at residential construction versus commercial or industrial. Also, you can look at new build versus renovation or remodeling. Some of the things we tend to see are really rising intensity of use in electrical applications, so more circuits, within each individual property, but declining intensity of use in non-electrical applications. We do see some substitution pressures, but this varies by region. Typically, the biggest pressure is from aluminium building wire, but only in those geographies where its use is permitted in building codes. And for this market segment, typically it's really served through distributors and wholesalers that serve construction companies. The next end-use market segment we're moving on to is utility network infrastructure. As a couple of examples I've put on here, really power cables running through conduits underneath the streets, but you're also looking at power cables for wind farms. So some of the major product lines you'll see there are basically land, low voltage, medium voltage, high voltage and extra high voltage power cables. For submarine cables, we look at medium, high voltage and extra high voltage cables. Also transformer windings, copper rod and bar used as buzz bar, bare conductors. And because this is utility network infrastructure, it's not just all about power cables, it's also about external telecom cables and other communications such as coaxial cables. In terms of its importance to the global markets, around a 17% market share, that's around 4.6 million tons. In terms of characteristics, well, the products tend to be specified by the utility or their contractors. They're really expecting an extremely long service life, which is really demanded. And because these cables are in use for a long time, you tend to have network legacy issues, and typically utilities are reluctant to change their networks where you have cables that are really designed to do their job. They want a homogeneous network, so they don't really want to have be carrying big inventories. That being said, replacement demand is starting to become an issue, particularly in North America, Western Europe, and Japan, where a lot of the cables that were installed after World War II are at or beyond the end of their service life, and significant replacement demand is forthcoming. For wind farms, it's really a choice of using copper or aluminium power cables, but the desire to move to wind power really means that we're seeing a lot of grid interconnector projects between countries, particularly in Europe, because if you're being more reliant on wind, you need these grid interconnectors to sort of manage the load in the power network. What this has meant over the past few years, we've seen major investments in submarine power cable capacity by the major power cable manufacturers. And this has really been happening around the world. The next end-use segment we're moving on to is industrial machinery and equipment. Major sort of product lines we're looking at there, really sort of winding wire for motors and transformers, low voltage energy cables, bare conductors, alloy rods, bars and sections for the sort of big industrial valve that you see there. Again, copper rods, bars and sections, industrial tube for heat exchangers, and castings as well. This segment commands around 11% market share in 2020. It's around 3.2 million tons copper content. Characteristics, well, there's really a huge variety of products and applications within this segment. The main dividing point is really between electrical equipment, so that's mainly transformers and industrial motors, such as the pictures that you see top left, and then also these sort of non-electrical valves, fitting and equipment. Within this segment, electrical markets, obviously continuing trend towards higher electrical efficiency, but it also, and this is something we'll come back to again, you're also sort of seeing this trade-off between pressures on trying to reduce the initial cost of these equipment, but then a trade-off or against sort of lifetime cost estimates. And again, because of the recent escalation in copper prices, you do see substitution prices in some areas, in electrical, between copper and aluminium. But of course, aluminium has been rising in price too. Of course, transport, very important area for copper as well. It's Audi e-tron there in the picture. But although I've tended to focus on autos here, it isn't just that, it's automotive, it's railway, ships and aerospace. The major product lines that we're really looking at here, automotive wire, which is consumed in the harness. You can see a picture of it there in the bottom. Winding wire that's consumed in various electric motors. Copper and alloy sheet and strip that's used in various connectors within the harness. Copper foil, which is the anode within an EV battery. Charging cables also for EVs. And you also utilize other copper and brass semis in much smaller quantities. Again, this is a significant end-use market for copper, around a 12% global market. That works out at around 3.3 million metric tons. So in terms of the characteristics, as I said, it's not just all about autos, it's these other transport applications. Really, a lot of these copper products are going via OEM automotive component suppliers. Most important of these is the wiring harness, which tends to be being assembled in basically low-cost, labor-intensive countries and then transported to where the cars are assembled. We were already seeing rising intensity of use in most vehicles, obviously greater variety of functions, but this is especially so in EVs, where the copper content can be as much as 3 to 4 times that of an internal combustion engine vehicle. With the push to electric vehicles, we're seeing dramatic growth in new electrodeposited copper foil projects and indeed expansions at existing plants. And this is really happening all over the world, because wherever EV batteries are being made for, these basically lithium ion batteries, LIB, wherever these batteries are being made, you need to have the foil plants close by to be able to supply them with just-in-time delivery. There's also a growth in charging cables and charging cable infrastructure. So heating, ventilation, air conditioning equipment, it's typified here by air conditioners, but it's any form of air conditioning, refrigeration equipment, fridge, freezers, anything you might see in a supermarket chilled aisle. It's really comprising just 3 main product lines here. You're looking at industrial tube. If you can see there, it's got sort of hatching within the tube. You have winding wire, which are used in electric motors and compressors, and you have some appliance wire and cords. It's a smaller market than what we've looked at some of the others, but at 8%, it's still a sizable market. It's consuming around 2.3 million metric tons of copper in 2020. It's really a market that has increasingly dominated by China and Asia, with their huge industries that are really supplying products around the world. HVAC markets are really driven by urbanization, obviously comfort in hot and humid climates, and refrigeration to basically preserve the life of food. But again, as in industrial machinery and equipment, we see this sort of conflict between inflation, or certainly rising input costs for copper and other components, and these pressures for cost reduction initiatives. And again, it's this sort of trade-off of should we really be producing these products that are going to last a long time, or producing cheaper products only going to have a lifespan of half as much. I think, if we're interested in saving the planet, then really we need to be producing products that have a long lifetime, not a shorter one. Copper, yes, it is under pressure from higher prices, but copper does and has continued to improve its offering in this market. One of the main ways it's been able to achieve this is by the downsizing of tube diameters and wall thicknesses. And there's also been some advantage in advances in the inner grooving tubing technology, the hatching that you see on the inside of the tubes, that's designed to stir up refrigerant flow to quicken heat transfer. So you can vary the number of grooves, the deepness, the angle, various things like this can all enhance the properties and get the tube to perform better. In the long term, there is a substitution threat from aluminium that can mimic copper's properties in this area. But of course, the price of aluminium has been going up too. There's some advantages to aluminium, but also some drawbacks. It's not a simple story. Then really the final segment that we'll look at here is really trying to catch up with everything else. And there is a lot of everything else, no matter how you try to segment the market. You're looking at a lot of these other equipment, and indeed what we're really calling miscellaneous applications. It's things like coinage, ammunition, a lot of these small appliances, too numerous to mention. Not surprisingly, it's absorbing a lot of product lines: winding wire, appliance wires and cords, electronic wires and leads, bare conductors, again, copper and alloy sheet, alloy rods, bars and sections, and also mechanical wire, copper foil for electronics, and castings. So we are left with a lot that's left over. So around about 24% of the global market, around 6.7 million tons in 2020. And more than any other segment, you're looking at a hugely diverse range of end-use applications, broadly split between consumer and general products, electronics, and then there's sort of catch-all other things which I've characterized by ammunition, coinage, clothing, things like zippers and fasteners, and other miscellaneous applications. Typically, we're looking at a much shorter lifespan in these areas. We might think about 2 to 3 years for a mobile phone, or up to 10 for a small appliance. In general, we're looking at lower value-added applications outside of electronics. Tends to be some more price-sensitive areas. That means there's pressures on downsizing, on thrifting, and substitution pressures. These may mean moving to cheaper alloys rather than copper, plating with copper rather than using solid copper, and then outright substitution to aluminium in electrical areas or in heat transfer, or using steel and plastics in other areas. So I'd like to really sort of try to draw this all together in a final summary and conclusion slide. What we've seen is copper use is very widespread and long-lived across a variety of end-use market segments. The world market size last year, when we look at both refined metal use and direct scrap, was, we think, just under 31 million metric tons in 2021. At least a third of this market was comprised of secondary or scrap materials, around 11 million tons. And when we look to the future with the challenging outlook for mine supply, we think it's one of the key conclusions that scrap is going to have to fill more of the looming supply gap. We've seen that copper and its alloys have many desirable attributes that make it a proven and reliable material, and that's why it's adopted in so many market areas. Above all, electrical conductivity, heat transfer, and its ability to be endlessly recycled are copper's key properties. And overall, when you look at the reasons why we're using copper across these end-use markets, well, really 80% of the reasons we use copper is directly due to its electrical conductivity. A further 10% is driven by its heat transfer capability and things like air conditioners. But you need electricity to operate these heat transfer areas. So what we're really saying is around 90% of the reasons you use copper is because it's directly or indirectly linked to its electrical properties. So overall, it's a fairly simple equation in a global context. Greater consumption of electricity, whether it be in the form of electric vehicles or in land or offshore wind power, inevitably means there will be increased demand for copper. The chart on the right there just summarizes the global world end-use picture across these 6 end-use markets that I have been discussing today. Thank you very much for listening, and I believe we'll now move on to some time for some Q&A. Thank you very much.
Good evening. This is Gerardo Alvear. I will be your driver for the Q&A session. I see Cam Harris there. Good evening, Cam. Good morning. Hello, Juan Carlos. And hello, Jonathan. How are you?
Good, thank you.
Let me start with some questions immediately to everyone. So, Juan Carlos, to you first. You mentioned in the hydrometallurgical processing the opportunities also to use equipments and not just pile leaching. Can you expand a bit on that concept and tell me what is the threshold in which I can make hydrometallurgical processing of sulfide concentrate profitable compared with smelting?
Thank you. I would say that
The main difference between the hydromet route and the pyromet route is that somebody mentioned that the minimum size for a smelter should be about 1 million tons of concentrate per year. The hydrometallurgical route doesn't have that sort of constraints in terms of scale. In fact, low scale processing plants for concentrate could be profitable. I would say that the main difference is the level of maturity that you have on the pyromet is much higher than in the case of the hydromet. That's why concentrates leaching and processing by hydromet has been on the table for many years, but we've seen just I can recall one operation which is actually operating, which is the Morenci, but the rest haven't really take off. But scale is, I would say, is the main issue that can be addressed by hydrometallurgy.
Thank you, Juan Carlos. Joe, good evening to you. One of the concepts that you mentioned when it comes to mineral processing and the ability to produce suitable copper concentrate was to look after the impurities that the concentrate is coming with. In the chat, Carlos Risopatron mentioned that copper concentrate content of antimony, fluorine, and bismuth are increasing faster than other minor metals traded internationally in recent years. What is the impact of this, first of all, in terms of the ability to be potentially removed in the copper concentrator? Can we achieve that?
We can remove a lot of them if they're not part of the mineral lattice. So if they're not part of the chalcopyrite or the chalcocite, often they can be removed in flotation by finer regrinding and close attention to the cleaning stages in flotation. And most copper concentrates could be higher grade. Now, in my talk, I spoke about enegite. In that case, there's arsenic that is part of the copper mineral, so mineral processing can't affect that. But in general, if there's an economic incentive or a commercial incentive, then the sites can install technology or can increase their amount of technology to improve concentrate grade.
Thank you, Joe. So I move with the question to the next step in the processing, that is CAEng in the smelter. When we have a smelter that has been put in place or erected for many years already with a technological setup, and you have in front of that asset a concentrate that may have some impurities, what can we do in the smelter to secure, Michael, a proper anode composition? Can you fight the chemistry, or you go with the chemistry alone to get to the point that you, let's say, dop the anode?
Yeah, I think the answer is fighting with the chemistry is never a particularly good idea. You know, it's the partitions between the phases and the furnaces is pretty established. So, and also trying to mess around with things like slag chemistry. But, you know, there's a lot of recirculating streams inside a smelter. A lot of the metals go around and round in circles. So, you know, the opportunity to intercept dust recycles and do maybe hydrometallurgical treatment of those dusts to try and lower the recycles would give you a route out of it. You know, you can be like Minerally Harless and actually roast the concentrate to drive some volatiles off, get the arsenic out before it actually gets into the door, and add a front-end roasting step. But I don't think there's a great opportunity for us to magically reinvent chemical thermochemistry to get different distributions. So it's going to be identifying streams that have the higher concentrations of the elements that we want to manage, pulling those streams out of the flow sheet, adding steps and obviously cost to deal with them. You know, and you know, we all know we've got to keep Mike happy because we send him lousy anodes, and life is not good for anybody. So,
thank you, Cam. Michael, how are you? I have a question for you as well.
Can I answer that? more.
Yes, please.
I mean, we've done a study for a large copper company where we've looked at the group 15 elements, starting at the mine site, going through the concentrator, going through their smelter, going through the refinery, and all of the recycles. And we all know as metallurgists, the answer is it depends. But as Joe points out, if the minerals are, if the problem elements are not associated with the copper mineral, then you can do stuff at the mineral processing. The chemically treat concentrates are very expensive and are just not economical. As Cam points out, there are things we can do at the smelter to remove, and there are very much dust streams, but we really like that 20-30% copper that's in that dust stream to go back into the smelter because we want that 20-30% copper. And so pretty much the arsenic antimony bismuth runs around in the smelter and comes till it comes out in the anode or it comes out in the slag. And then it comes to the anode. And in the anode, then the refinery deals with it by treating the electrolyte or the slimes. And so when we treat the anodes, the electrolyte, we eventually make a solid that has copper and really high levels of arsenic and antimony, and we send it back to the smelter. And so it eventually the arsenic and antimony leaves in the slag or in the precipitates of the various streams that we take care of. And that's why they cost a lot of money.
Thank you, Michael. I'm going to the next question to you. This is a hypothetical situation in which you have a refinery well established that is treating anode from a smelter, and suddenly you will have a recycling stream coming from copper scrap, let's say low-grade material PCBs, that may have in front of you the following situation. I may have a copper bullion reaching PGMs and precious metals, but also with a lot of nickel and tin. Shall I produce anode, or shall I go leaching electrowinning a separate circuit with established in-house? What is the best criteria?
It depends. So
it depends. I want to invest
now
today.
I'm going to say what it depends on. How much is the value of the gold and the silver? So the gold and the silver will dictate, in my mind.
Yes. So let's say a bullion will be at least in between silver and gold 0.2%.
Gerardo, it would depend on the economics. You can go to Umicore. Umicore will take their copper that comes out of their scrap recycling furnace, and they've chose to go with pressure leaching and salt and pressure leaching electrowinning because they want to get at their gold and silver quickly. I think Redwood Materials is also doing that in California, or they've looked into that because the value in the electronic waste is heavily in the gold and silver. If you have low amounts of gold and silver, low, relatively speaking, and you already have the electro refining facility, then it becomes a capital cost, right? So do I build a new facility or do I put it into my existing plant? And so in my mind, there's too many variables there to tell you it always is this, but I think that's the overarching thought process. So if you're looking as an investor into how do you treat scrap more efficiently, do I build a traditional smelter or electro refinery, or do I go with the newer technology of leaching black copper and making a hydromet recovery circuit? I think you have to look very closely at what the gold and silver is in what you think the scrap's going to be.
Yeah, I agree with you, Mike. You look at like the Horn smelter, classic example. They bring in all sorts of horrible stuff into the smelter, but they have enough copper going through it that the solution to pollution is dilution. They can still make a half decent anode that they get to CCR. But not everybody has a couple 100,000 tons of relatively inverted commas clean copper coming along for the ride to dilute into. So I think it's going to be very situation specific.
I think the other thing, Gerardo, is from an investor standpoint is, we do the every 3-year surveys, and we're doing that right now for 2022, the Copper 22 meeting later this year. We estimate that 50% of the world's electrowinning capacity is not being used right now.
Yeah.
And so the question is, can we make a concentrate that's high in arsenic, go through a pressure leach, stabilize the arsenic with the iron that's already in the chalcopyrite and the enargite, and and utilize the facilities that already exist in predominantly Chile, but other places around the world. I think there's an opportunity for someone to think outside the box using really conventional technology at this point, but somebody has to be willing to take the risk to do it, and then partner with people who already have an electrowinning facility.
Thank you. Jonathan, I have a question for you. You spoke about the end user fabricators. In your analysis, do you see enough integration between the refineries and then users to try to achieve better economies of scope in the development of these end use applications? Is that necessary or not for the market?
I wouldn't say it's absolutely necessary. I mean, the most logical integration is between, basically refineries and rod mills. Obviously, Arubis in Germany, Freeport in North America, good examples of that. But you really see this trend in a very major way now in China, where you have companies such as Jiangxi Copper, who obviously are one of the world's largest smelter refiner, and they're actually last year made about 1.5 million tons of wire rod. So for them, there's a very high degree of integration. And obviously, rod is the primary semi-manufacture. It's around 60% of the total. So that's really the most logical area for there to be integration. It makes, I'd say, rather less sense for integration into the sort of the brass mill products, the sheets and strips and tubes and those product lines. I think there's much more logic at the wire rod stage.
All right. Thank you very much, Jonathan. And for Joe, I have a question for you, probably the last one, because I have been told we have 2 minutes more. Is arsenic a killer for the copper boom needed for the green economy or not?
No, I don't think it is. There are ways to deal with it. I think as we said before, if it's not in the mineral, in a lot of cases it can be reduced in concentrate, or at least the copper content can be increased. And so that the amount of arsenic per tonne of copper going to the smelter will be less. There will be a need in some of the undeveloped deposits that are high arsenic and they are in copper-bearing minerals. In some cases, there will need to be some on-site processing, some partial leaching of the concentrate, possibly roasting, but I think more likely the modern developments in leaching. There's partial leaching there to remove arsenic, fix it in a stable form on site, and store it close to where it came from, in the tailings dam or in the mine, to produce both a higher grade and a lower arsenic concentrate for a smelter. So there are technical solutions. They just cost, but I don't think it's... The mining companies may not choose to do it now, but if they have to do it, it will get copper to market.
Thank you, Joe. Okay. I think I ran out of minutes. I have 5 minutes to give to Boyd Davis because he loved to talk and close this amazing group of talented people who were with me today. Thank you very much for the pleasure to interact with you online. I hope to see you soon in person. Have a good day everywhere and good evening for you, Joe, and me, you in Australia, me in Singapore. Bye.
Thanks, Gerardo.
Thanks. Bye.
Thank you. Bye.
Gerardo.
Hi, everyone. We're at the end of a great 2 days. Thank you very much to all the presenters who put together great talks, really world-class talks. The goal was to give investors some unbiased information about the copper business and the entire value chain. I hope that we've succeeded in doing that over the past couple days. This session will live on. We will be putting it together as we did with the nickel one on YouTube. You can just find that by typing MetSoc value chain. And Crux Investor will be assembling all of this for YouTube. So that leads me to thanking them, Matt and Tom, for their hard work in putting this all together and organizing all the video and the communications. I would like to also thank Scotia Wealth Management for sponsoring this event. It's greatly appreciated. And to MetSoc for being hosts for these value chain series. And lastly, Phil Mackey and Gerardo Alvear, who you both saw on these presentations, really helped to put all this together and work with me to get all the speakers together and get everything lined up. There was a lot of backstage work going on. I appreciate everyone's attention, and of course the viewers and people who are interested in this, I appreciate their time too. So thank you very much. The next value chain, we'll have to see when that happens, but hopefully in the not so distant future. Take care. Thank you, everyone. Have a good weekend.